are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, Ethereum successfully completed its software upgrade, but crypto's still got problems. We'll discuss the post-merge era with John Wu, president of Ava Labs, the company behind the Avalanche blockchain.
And investors are bracing for volatility as merge mania cools off and Fed fears heat up. We're charting the course ahead for crypto with Vidiella of LedgerPrime.
Plus, NASDAQ is making its first big crypto push to lure institutional clients. We've got details on the exchange's new group dedicated to digital assets.
All right, all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you'll see is actually a bit of a mixed bag. It is a risk-off day when it comes to equities, and we know Bitcoin is very closely correlated to those, so no surprise it is down about 2%, trading right around that $19,000 level. What's interesting is while Ether has been underperforming since the merge was completed last week, it's actually outperforming today, up about 0.8%. But your real outperformance is coming from XRP. Ripple, of course, is in a bit of a battle with the SEC. The SEC had filed a lawsuit saying that XRP should have been listed and registered as a security. Ripple filing a motion to dismiss that last night, saying their investors never had an investment contract and therefore no rights. So it's interesting to see that reaction for XRP, up about 8% at this point. And then I'm just checking on Avalanche as well, down about 1.6%. Of course, we're going to have more on that particular token in just a moment, Matt. But first, you've got a cool chart to look at.
Yeah, I have. And actually, we have a number of cool charts to look at. Our crypto team put together a technical look at Ether, and Abigail Doolittle is going to come and show you more technical charts in a second. I'm just looking at basically a pattern that's built up from the June lows here. Ether had a pretty good run into the merge, or at least the beginning of the merge, and it's come off since then as things have gone smoothly. What you're looking at here is a regression pattern that's built up, and we're coming down since then 2 standard deviations. Now, technical chartists tell me that if we break down to the third, the next step is 1250, and below that, the next step is 1,000. So Ethereum's price moves having a hard time keeping up with the enthusiasm from market participants over the upgrade to proof of stake.
Ethereum moving to proof of stake.
This is massive.
A monumental effort.
The merge was highly successful.
Transitioning completely to an energy efficient world.
Increased decentralization.
The barrier to entry is much lower than proof of work.
This is, a superior system in a lot of ways.
The end game is 10 million transactions per second.
Security, reliability, speed, that's still open for debate.
What's next is going to be a lot of investments into scaling.
We expect 100% of the activity to move there over time.
Ethereum as a network is just getting started. It's going to get a lot faster. It's going to get a lot cheaper.
So the merge was a success, but Ethereum is still drawing scrutiny, fresh regulatory scrutiny, to the industry. Shonali Bassick has been tracking the latest developments for us, and she's here. Shonali, what do you got?
Now, what's at stake, Matt, is staking, because the saga over crypto regulation continues. Last week, SEC Chair Gary Gensler said that using proof of stake could cause a token's blockchains to be considered securities. And that's a label that many in the digital asset industry have been trying to avoid because of the increased regulatory requirements and oversight that comes with. The bigger problem here with Ether is that staking is becoming a critical part of the value proposition, and the SEC is worried about its attributes, particularly as a yield asset, similar to some of those that got the industry in trouble earlier this year. Now, Brett Harrison, the president of FTX US, highlights the key dilemma for an exchange like his. And what he asks is perhaps the staking in such a system might be considered an investment contract of some kind. And that's really an open question. Harrison added that there are multiple kinds of staking, adding to the complexity. But remember, the SEC has also been wary of the NFT market and whether some of the assets are being used to raise money is similar to other securities. And NFTs also have a huge link to Ethereum and other blockchains. Gensler's agency is by no means the only one scrutinizing the market at large. The U.S. Treasury Department and Janet Yellen have been for months assessing risks tied to stablecoins and decentralized finance, as well as NFTs. The White House has been directing agencies to aggressively pursue investigations and enforcement actions to weed out fraud and abuse in the crypto trading industry. But they're also mulling the benefits of a digital dollar, and the Federal Reserve is considering ways to standardize rules for a digital financial system.
All right, Shanali, thanks very much for that. Now, John Wu, president of Ava Labs, joins us to talk about this and a number of other things. Ava, of course, technology company building the next generation blockchain platform, Avalanche. John, thanks so much for coming to us in the studio here at 731 Lex. What's your take on the increased regulatory scrutiny? This is something that I think a lot of people in the crypto community want to get done, but it's kind of painful right now.
Sure, when you go through anything that is uncertain, it is painful. But I think at the other end, it's going to be better when there is certainty, just like the markets. The real issue is making sure that there is a good framework and the different regulatory bodies in the U.S. can work together, and then therefore keeping the innovation, developers, and ultimately, we should have the capital markets here. I mean, Coinbase is only 10% of the whole trading volume. Why shouldn't we have more?
So you spent a lot of time on Wall Street prior to coming into crypto. Are these assets securities? Do you think the SEC, Gary Gensler, has a point with some of these assets?
Some of them, they're all different. There's utility, there's loyalty tokens, there's securities. Then there's actually just, fun digital collectibles called NFTs, which clearly no one knows exactly what to do with it. On your earlier segment, Gary Gensler says staking should be considered somewhat of a security, but it's a different construct. It's never existed in traditional finance. You're kind of putting labor to work, and you're putting collateral down to get yield. So it's a hybrid. So maybe it should be income for work that you contribute as opposed to a security.
Well, of course, the reason we're talking about staking is because Ethereum is now proof of stake. The merge has been completed as of last week. What is different for you now this week that that's over? How much realistically did it change?
Well, frankly, it doesn't affect any of the layer ones in the short term because the merge is about going from proof of work to proof of stake. The scalability issues are going to be addressed in 2023. And I think in the medium term, all layer ones should actually be rooting for more success. I mean, Kailey, you may be too young to know this, but like Matt and I, in our teenage years, we hung out at the mall, and that was your
I used to go to the mall.
The food court.
But there's always a tentpole store. That was Nordstrom's, right? Mm-hmm. And that brought in foot traffic. But next to Nordstrom's, there's also Foot Locker, there's the food court. And right now, Ethereum is, Nordstrom. So it'll be foolish for Ethereum not to want the food court so people can have more foot traffic and more experiences. And it'll be foolish for all the other layer ones to not want the foot traffic from Nordstrom. So in the medium term, I think it's good for everyone.
All right, an analogy that I do understand, but thank you very much. I want to turn to Ava Labs specifically, though, because there was a whistleblower report last month making a number of accusations, basically that your company paid lawyers at Roche Friedman to hurt competitors, distract regulators, and pursue the personal vendettas of your founder and CEO, who I should note he himself has called the allegations conspiracy theory nonsense. What is your response to them, and is any part of them, given there are multiple parts in these parts of these accusations, is any part of them true?
No, absolutely false. In fact, the other party has already come out and admitted that it was false. But what was really good about that whole experience was the Avalanche community. The instant that came out, the community recognized how false it was, and the support that we got at Ava Labs from the Avalanche community was just incredible. It really actually made, ultimately, Avalanche even stronger.
What differentiates Avalanche from the 20,000 other cryptocurrencies out there?
Well, I'll highlight a few things, but there's many things. I mean, first of all, the instant finality, because the protocol itself, it's a different type of protocol. So settlement and payment is the same time. The architecture, we have the concept of subnetwork, which is basically a layer one on top of Avalanche, using the security of Avalanche. That allows you to do so many things. It basically provides developers easy execution environment where they can create their own necessities and be composable for their own applications they want to create. So those are the two things. And then most importantly, I think, is that this subnet construct allows regulatory compliance from places like KKR. So I think one of the big announcements we had last week was with Securitize and KKR. This is the first time. I mean, this is very exciting to me because I came from traditional finance. When real-world assets can get put on the blockchain, the permissionless blockchain, you're really a watershed moment because so many assets today are private and illiquid, and individuals don't have access to that. Now, KKR is the first large asset management allowing a sliver of a very well-known fund to be tokenized. This basically is the first step to the future of finance, where all three of us eventually will be able to buy private securities, private funds, as easily as you and I buy Apple stock.
Well, and what else will we be able to do? What other applications? You know, Eric Adams has talked about putting your driver's license on the blockchain, or the deed to your house, your birth certificate. And we've had a number of people talking about, you know, other real assets or even CBDCs that could go on certain blockchains. Would Avalanche be the right fit for that?
Absolutely. This is actually all happening. I mean, not just in Avalanche, but around the whole ecosystem. Real world assets like loyalty points at Starbucks. You've got the PGA. You've got also the football clubs in Europe, or the soccer clubs in Europe, all doing engagement fan tokens. Ticketmaster converting their tickets from QR codes at some point to NFTs, which is a more secure way. So all of these quote unquote real world assets are coming to the blockchain, leveraging the benefits of, you know, operationally cost effectiveness as well as better distribution ultimately.
All right, let's end by talking about real world problems that is pretty much universal right now, one of them being inflation and the Federal Reserve fighting to respond to it and bring it down in the form of tighter monetary policy. That has weighed heavily on the entire crypto ecosystem, no doubt about it, but I've noticed that there's actually been some recent underperformance of Avalanche specifically, and I'm wondering what ultimately you attribute that to.
Well, I think it's a higher beta. If you look at the other layer ones, it's higher beta than Ethereum and Bitcoin. And very recently, since the merge, Ethereum's actually underperformed, you know, Bitcoin. In the end, all assets, whether they be crypto assets or Snowflake, you know, SaaS companies, they're all, the prices move because of three things: the macro, the liquidity, and the underlying fundamentals of the assets. In the case of Avalanche and other crypto layer ones, the adoption of the network is the fundamentals, and that is absolutely improving. So for your viewers and your investors, there's a lot of alpha to be generated, because underneath the hood, there's a lot of dispersion.
John, thanks so much for coming in. Really appreciate you coming to the studio. John Wu there. He is president of Ava Labs, talking to us about a number of issues. And the Fed, obviously, is one that's front and center, because we have that meeting tomorrow.
Yeah, absolutely. And we're going to talk more about that with our next guest. Coming up is Laura Vidiella, vice president at digital asset investment firm LedgerPrime.
Plus, NASDAQ's crypto push, how the stock exchange is capitalizing on an increasing appetite for digital currencies among big money investors.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Kailey Leinz with Matt Miller. Well, Ether has been lagging since the merge was completed last week, but what do the charts signal about where it will go next? We're charting crypto now with Abigail Doolittle, Bloomberg Markets correspondent, who always has a great look at the technicals. Abigail, what do you see?
Well, let's chart crypto for sure, Kailey. And let's start out with Ether, as you were just mentioning, because it, of course, did make it through the merge, but it was a little bit dodgy, to say the least. And it's interesting because Ether's 6-month chart, it really looks a lot like that of the NASDAQ 100. The downtrend, but then off of the June lows. Now you can see the near-term move lower off of the merge was down, but now Ether buyers seem to be supporting Ether, trying to bring it back above that trend line, maybe above the 5-day moving average, perhaps all the way back toward 2000. That's just the near-term picture. However, if we continue to chart crypto and we take a look at the longer-term picture here of Bitcoin, this is a monthly chart that we looked at a few weeks or months ago relative to its 50-month moving average, which is well below any of the daily moving averages. And for the first time in its history, we have Bitcoin well below that 50-month moving average. It's going to be interesting to see whether or not the buyers step up to support it higher, Kailey. If not, similar to that chart that Matt was showing on Ethereum, it suggests that some sort of medium to long-term crash could be ahead.
All right, great charts. Abigail Doolittle, thank you so much. Let's continue the conversation now with Laura Vidiella, Vice President of Business Development and Strategy at LedgerPrime, which is a quantitative and systematic digital asset investment firm. She is joining us now. Laura, great to see you. Let's first talk about the merge, which was such a hyped event. It seems like it kind of turned into a buy the rumor, sell the news type deal. Is that essentially what it was?
Yeah, absolutely. So that's a little bit what we saw also on the OTC side and also directly on the derivatives market. So the announcement of the expected date of the merge was done around July, right? And then all the way from July coming into September, we saw a lot of structures like call spreads or call flies, which are pretty bullish. And then more towards the last couple weeks upcoming to the merge, the narrative or the trading behavior changed more towards like selling calls to buy puts, trading put spreads, or outright puts, right? So getting ready to hedge anything that could happen during those days. Even more specifically, the day off, we also saw funding rates going pretty negative, and that's just like traders for that time hedging for those moments around the merge.
At the same time, you know, the S&P and the NASDAQ have come down almost every day since then. The correlation seems to be, as Kailey was pointing out to me earlier, approaching 1 again.
Right. Yeah. So there's definitely the narrative of macro affecting crypto markets a lot, right? And we've seen it across the whole year, how any macro event, whether it's Europe, whether it's in the US or anywhere in the world, has always like impacted price action in crypto. Specifically, even last week, right? We saw how traditional markets went down immediately after the CPI print, and that also dragged crypto markets down with it. Now, upcoming, we have the FOMC meeting, and the market is pricing at least like 75 basis points, right? But not fully 100 for now. But if we do end up seeing 100 basis points, then we might see quite the volatility following the announcement.
Laura, is essentially what you're saying that these are just risk assets, and if equities aren't doing well, crypto can't do well either.
What we're seeing more and more is, especially as more institutions are coming into crypto, right? They're going to follow the same patterns that they follow in macro, that the same ones that they do in crypto. So, in a way, especially for the most liquid assets for Bitcoin and Ethereum, we will likely continue to see this trend until it breaks at some point. Yes.
LedgerPrime, what's your unique selling point? What's your edge over the competition?
What's our edge over the competition? So we were one of the very first, not only market makers, but one of the very first funds that focused on derivatives back in the days. So we've been building up a lot of experience and strategies around it for the past 5 years. We are continuing to position ourselves in the derivative space. That's how we're mainly known and hoping to go in that direction. Market
makers need liquidity, and that's been a real issue in this market. Does that come back? And what helps?
Right, that is correct. So I think one of the not like kind of like issues, but one of the main events that we saw earlier this year, right, was we went through kind of a Lehman-like moment with the fall of Three Arrows as well as Terra, right? So currently market makers were kind of more compensated by bringing more liquidity since markets are a little dry. I think overall there's liquidity just being pulled out, waiting to see what's going to happen in a macro environment. Macro is not looking great coming into fall. So if we see things improving, then liquidity will also improve overall. Cost of borrowing is also increasing. So that also affects how market makers make prices.
Well, and of course, you're not just a market maker anymore. You've expanded to be an early stage and venture capital type investor. What specifically are you looking to invest in right now?
That's correct. So right now, LedgerPrime is our VC thesis. We basically invest in what we believe is going to be the future of money. And that can take any form of like data, NFTs, derivatives, credit. And as of right now, we're mainly looking for more high conviction size deals, and instead of like a smaller ones. So more also like long-term investments that we can also have an impact or like help with from a liquidity perspective, and as well as like our thesis being a trading firm.
Well, Laura, you said they're the future of money, and Matt and I were just speaking with John Wu, our previous guest, off camera about whether or not people still ultimately think of cryptocurrencies as an eventual payments mechanism, as something that will replace fiat currencies. What do you think?
Replacing fiat currencies, that's a bit of a long-term shot. Like, we're not going to see that happening anytime soon, but especially more emerging economies, we can see them use, and we see it already, right? A lot of countries in Latin America or like in other areas in the world, they are actively using cryptocurrencies, especially to hedge against inflation, right? There's actually, I think it's Argentina, in Brazil, a lot of the citizens there, they buy Bitcoin and Ethereum right away with like their monthly paycheck, because the risk of holding Bitcoin and Ethereum is lower than the inflation in their countries, right? So I think the narrative is actually really good for these emerging countries. For more Western countries, we will need to get more involvement with like regulators and see how we can work together towards achieving middle ground there.
All right, have to leave it there, but great to speak with you, Laura Vidiella, Vice President of Business Development and Strategy at LedgerPrime. Appreciate your time.
Be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Kailey Leinz.
All right, now let's get to some crypto stories that caught our attention this week, starting with the UK regulator issuing a warning about Sam Bankman-Fried's crypto exchange FTX. The Financial Conduct Authority says FTX isn't authorized to offer financial services or products in the country, and that investors are unlikely to get their money back if things go wrong. A spokesperson for FTX said they're communicating with regulators.
And crypto firm Ripple is fighting back against the SEC. It claims its XRP token can't be considered a security subject to the regulator's authority because there was no investment contract granting investors rights. The outcome of the case could help clarify SEC authority over at least some crypto assets.
And NASDAQ is making its first major push into crypto. The second largest stock exchange will initially offer custody services for Bitcoin and Ether to institutional clients. NASDAQ would be competing with crypto firms such as Coinbase, Anchorage Digital, and BitGo. And actually, the NASDAQ says that custody is foundational. They can expand it from there. There's no immediate plans, though, to launch a new crypto exchange.
I mean, this to me is absolutely fascinating because custody is so important, especially to bigger institutional investors. It's a brand new business for the NASDAQ, and if they get it right, it can change the game not only for them as a business, but for crypto as an asset class.
And of course, this is just the latest example of increased institutional adoption. You also have the likes of BlackRock and Coinbase, for example. So definitely stories we will continue to follow. We're hoping we'll have the chance to speak with NASDAQ about that in the coming weeks. But coming up for sure next week on Bloomberg Crypto, Katie Stockton, founder and managing partner of Fairlead Strategies, will be joining us. You can find us here Tuesdays at 1 p.m. Eastern Time from Bloomberg World Headquarters in New York. This is Bloomberg Crypto on Bloomberg.